Hello guys, welcome back to my channel. It's your boy FX. In today's video, I want to explain a very important concept. It seems to be very simple, but I've seen a whole lot of people making some mistakes, and maybe probably when they go to YouTube, watch some content, and then they don't really understand the basics or how it works, and then they ended up applying the same principle they've watched, and at the end of the day the result or the outcome of it is not funny. Like, they use it to trade and they still run in loss, and they were like, what is happening? I thought this thing, somebody said it works and all. So what I want to explain to you guys is just how you can use Trendline to trade. All right, just Trendline strategy. How you see, if you go through my previous video, I've not really lay emphasis on Trendline support and resistance, but especially how you can trade them. But I've taken it upon myself that most of these strategies you see online, they are all built on this basis. So it's important you actually understand what trend line is and how you can actually apply them on your day-to-day trading activities. So if you understand concept of trend line, it's going to make your work very your analysis, or it will simplify your analysis and then make it more easier for you to take profitable decisions in the market. So if you are new to this channel, kindly make sure you subscribe to it, and then don't forget to hit the likes button. Share this video so that others can actually learn from it. I'm sure there will be one or two persons out there that might be making the mistakes I will be showing you here on the chat. So don't forget to also join the Telegram channel where we share updates on our trade. The link is in the description bar. And if you are yet to register or open a trading account, make sure you do that. The link is in the description bar. Get yourself ready and then start trading as well, because to learn or to become better is by consistent trading. All right, so let's dive into what we have for today. Now, let's assume this is your market. I'm just going to give a textbook schematic of how a general market might looks like, and then I'll show you how you can actually understand it. So in drawing your trend line, there are things you need to understand. First, you need to check what your market is doing. You need to understand market structure. Okay. So for instance, if this is a market that has been, or this is a selling market on the daily time frame or 4-hour time frame, and there is a support around this region, and because of the fact that this market has sold down to this particular support, you are probably anticipating to know what to do next. Okay, that's why I say market structure is very important. For you to have this, for you to have seen the market coming to a particular support level, you should have it at the back of your mind that there will be a kind of reaction to this support, even if it's going to break it. And this reaction, if you go down to the lower time frame, is going to look like this. You see something like this. Okay, so this is how it's going to look like. So what happened here is a sort of double bottom created here, and then you see that probably after some time the market continued to break structure, or creating what we call minor structure within a market range. Okay, so let me stop here. Now, when you look at this particular chart carefully, remember I said this region is the higher time frame, probably your daily time frame or your 4-hour time frame, and then this particular one is on your lower time frame. Let me say 15 minutes or 30 minutes. Okay, so for you to understand what is happening, you need to first of all mark out your market range. Your market range should be determined from your higher time frame perspective. Okay, so this is the range. Now, the mistake many beginner make is the moment they see this type of thing happening, they will conclude that this market have started buying, because you can see that the market is actually creating series of, but this is on the lower time frame. But the moment you are able to identify that, okay, what this market is doing is just a kind of pullback, that chances are there that it's on the lower time, in the original direction, which is what the bearish move, because you use the higher time frame to determine your market trend. So what you have to do is you have to wait patiently. For you, if you are looking for a buy opportunity, you have to wait patiently, because right now this market is not a bullish market, it's still a bearish market. This is a higher time frame perspective, says either daily or 4 hour, and this is what your daily time frame perspective. So what you want to do is exercise a patient, or be patient enough till the market break out of this particular range, and then it started creating this structure. Now, at this point, you can now think of when you want to draw your trend line. Okay, this is when you can now apply your trend line, because number one, the market has broken structure to give you an indication. What do I mean by it has broken structure? This particular region, this were the range. The market has broken out of this particular market range. This was the recent bearish range that was created by the market. So now that it has been broken, your bias should have shifted from seeing this market as a bearish market now to a bullish market. So what you need to do is to draw a trend line. And when you are drawing a trend line, you don't need to complicate things for yourself. All you just need to do, you need to be very flexible. Okay, you need to be very flexible. Now, there is a first touch here. That is one. A perfect second touch here. That is two. So what you have to do again, another thing you need to consider again is the points you are willing to take this trading decision from. Is it at a is it at your point of interest? What I mean by point of interest is like their valued point on the chart that trading decision can be made. Some people call it area of value. They are actually your support and your resistance. So for instance, if I am willing to take a trade or to apply a trend line as a trading strategy on this particular market, two things I will do is this. This is my first trend line. I can as well look out for a second trend, because as a trader, you really need to be very flexible. So this is my second trend line. All right, this is the first one, the second one, and then I'm waiting for the third. So the moment I see that, and don't forget that this is actually a good level of or zone, because support can turn into resistance can turn into support. So this is actually a good level. So the moment I see that the markets make this rally down to this particular point, this is where I want to make entry from. And I can actually target this particular, the nearest swing high on the higher time frame, so that I can have good risk to reward ratio. Meanwhile, you can also take partial around this region. But for swing traders, you can actually target the nearest swing high. This is just the perfect way in which you can actually draw your trend line. So you don't just have to come to the chart and then draw only a trend line and you start making trading decision. You'll be disappointed. All right. So the few things I've said so far, the summary of it is, first, you need to understand the direction of the market. Second, you need to know the phase at which the market is currently because the market can either be in an impulsive move in the original direction of where it's going to, or it can be in a corrective move or pullback move, which can also be called a retracement move. So the moment you understand this particular concept, the next thing is, what are your expectations from this market? Like, what I mean by expectation, it's what they call expectational order flow. What are you expecting the market to do next? So if it's a bullish market, is it retracing to continue in its bullish move, or is there tendency that this market is going to break out? For instance, I've seen what this market was doing. You can see that the market was bearish at this point. it came to a good resistance on the higher time frame, and then I can figure out that this thing is happening on the lower time frame. So I was patient enough, although even though there is a visible trend line I can see, until the market actually tell me that, man, I'm going to start buying. I'm tired of selling. Why? Because there is a break of a higher time frame structure. There's a break of a higher time frame structure from a higher time frame market range. So the moment I do that, and I'm not looking for a confluence. Confluence is like having different reasons why you want to take a particular trade. So I'm able to draw this particular trend line, waiting patiently for this market to come to my POIs, and then give me that. Then I make that, that decision for a buy, targeting these regions. All right. So this is where I am going to make my decision from, and I will be targeting this particular level. My stop loss is just slightly going to be below the trend line, below structure. So these are perfect ways in which you can actually make trading decision using trend line. You don't just have to come to your chart and identify, and because there are a lot of trend line littered all over the chart, but not all of them are valid. Some are tradable, some are not tradable. The ones with high probability are those ones that are in confluence with your important levels, which are your support and resistance. So if you come to the chart, you can actually see, you can actually find your way is littered. This is 5 minutes. This is 5 minutes time frame. Do you see? This is the first one. This is the second one. Sorry, this is the first one here. This is the second one, and this is the third one. What do I do? That is the reason why, and I identify it because this is a level where the market has been retesting for a long period of time. So I have to make this point, this area, my POI, which is what point of interest. So there is a video I already have I've already uploaded on POI. So you need to understand what are the importance of point of interest so that you can actually use it to make trading decision. And you see that even though the market has not really okay, the market was retesting, but eventually I know that there's tendency that the market might come back for that third touch. And you see, the market eventually come to retest the trend line for the third time. And what happened? It crashes all the way down. So whenever you have your strategies, if you have a strategy or you want to apply trend line to trade, just ensure that you are trading them alongside with an important level. So if you check other charts, they are just littered everywhere. They are littered everywhere. Okay. So just kindly make sure you watch this video again so that you can get the most out of it. Okay. They are littered everywhere. If I want to make a decision on this market, I know that the market is bearish currently. So I would have made an entry from this level. Can you see? I would have made an entry from this level because this is first, second, and then third. So I would have made an entry from this level, and you can see that the market is actually crashing down. So this is how you can basically trade trend line and how you can use trend line to make trading decision. So thank you so much for staying to the end of this video. I'm sure this video is helpful. So make sure you give us a thumbs up and then share this video to friends and family so that others can actually learn from it. And then we all can grow in this Forex race. Thank you so much. God bless you. See you in our next video.